Why was I willing to buy that stock in front of earnings when those of you who know me and have been watching this channel for the last 3+ years know that I hate buying stocks in front of earnings? Okay. Because this stock is one of a few names that are on the ARMR whiteboard that we call ARMR power plays. There are few names you'll come across in your life. When you do the research, and you'll uncover some names where the industry is going through a paradigmatic shift, and this company's at the center of it. Read and react. That's what we're doing. The 7 steps of how we identify stocks that we're going to buy. Here's Trade Desk. Okay, Trade Desk for ARMR insiders. By the way, if you enjoy this conversation, if you find it helpful, if you find the information valuable, you want to subscribe. Right down here, you can subscribe to the YouTube channel, hit the like button, all those types of things. If you want to be part of our virtual hedge fund, then consider subscribing to the ARMR Report. You can join us every day and do the research that I'm about to walk you through on Trade Desk. We bought Trade Desk right here. I was sharing with ARMR insiders. In this green box, I was buying options on Trade Desk in front of the earnings number. 6 days later, the earnings were released. The stock was up, and that position was up 260%. Now, why was I willing to buy that stock in front of earnings when those of you who know me and have been watching this channel for the last 3+ years know that I hate buying stocks in front of earnings? Okay. Because this stock is one of a few names that are on the ARMR whiteboard that we call ARMR power plays. There are few names you'll come across in your life. When you do the research, and you'll uncover some names where the industry is going through a paradigmatic shift, and this company's at the center of it. When you find that, the reward is always going to be worth the risk I'm taking when I put money to work. And so I will occasionally put money to work in an asset in front of earnings because I think they're going to have a huge quarter, or a quarter, let's put it this way, that's dramatically better than the street thinks. So real quick, just to share with you again. So this is our 7 basic steps to fundamental analysis. We look for quarterly revenue and earnings growth, and you could put a number on it. You could say something better than 25% revenue growth. Earnings are a little bit more difficult, and we could take a peek here using Investors Business Daily Market Smith as our guide. Right down here, you'll see the quarterly numbers, the last 4 quarters for Trade Desk. Okay, so 50% earnings growth versus a year ago, 43% revenue growth, 24% revenue growth, 39% revenue growth. And then this quarter came in 35% and 11% on the earnings growth number. Okay, so let me just say a couple things about that. Number one, we look for earnings and revenue momentum. And in newer businesses where there's a paradigmatic shift going on and spending going on, what we're really looking for is the revenue line to be increasing at a clip of better than, let's say, 30%. The earnings number can fluctuate a bit depending on a whole number of factors. So I'm sharing with you these 7 steps. It's not that there's a specific number. It has to be this, it has to be that. You still have to do the work to understand the company. For instance, there are military plays right now that look great. Stocks are going up. They have great revenue growth, but earnings going like this year over year because costs are going up to produce product that we believe in the future will show revenue and earnings growth, right? So I remember Amazon, for instance, had great revenue growth and negative earnings because they were spending like crazy, opening up fulfillment centers and all these things. And the stock went to the moon. So my point is, you need to look at these 7 rules, okay? And then use them as a guide So we look at the quarterly earnings revenue. We look at the balance sheet and income statement, make sure there's not too much debt on it, make sure the day sales outstanding is not horrific, make sure the margins aren't being crushed. How do margins help us? Well, just think of Deere, right? Deere's, Deere as a Dow company, Deere should be crushing the numbers right now. And the revenue numbers keep coming in great because of their business model, but margins are getting destroyed because the cost to produce the product can't keep up with the inflation of what goes into the product. So obviously margins are important. We like to get to know management. When it comes to trade desk, this was very important. And so what we did with trade desk over time, we followed trade desk and listened to the conference calls, which is number 7 on this list, trying to get a gauge of whether or not the management are trying to sell you something or they're just giving you the facts. You'll learn this over time when you do the research yourself, but there are just some management teams that are trying to convince you how great their company is. I don't like those companies. I don't like those management teams. I don't want a salesman as a CEO. I want an execution specialist as a CEO. And if you listened, which we did on our desk, ARMR insiders were joining me while we did this over the last couple of quarters, we listened to the management team of this company, and they just keep delivering on promises quarter after quarter. Now, analysts don't believe it. So the last couple of quarters, they kept saying, guys, we're killing it because something major is changing in the ad business, and we're at the center of it. And analysts don't believe it. The stock keeps going lower. So when the stock is down big into an earnings number, and we can just take a look at the stock again here, okay? So the stock sold off all the way down into the earnings number. Total disbelief in here as they keep coming out with better than expected numbers. In here, the stock goes down anyway. Another good number, the market doesn't care, goes down anyway. Right in here, we're willing to buy it because generally speaking, something I've learned over the years, 2 quarters in a row, Wall Street tends to ignore it. Analysts think they know better. It's a short-term blip. Analysts were convinced there's a major problem in the ad business and trade desk gonna get killed. And management keeps saying you guys are wrong, and analysts think they know better. But by the 3rd quarter, 3 quarters in a row, the street begins to believe. And you get a huge pop in the stock if the company can deliver 3 quarters in a row. And that's what happened here. And we expected it to happen. That's why we're buying the calls in front of it, okay? The number 4 on this list is what's key to this story, something new. I'm going to focus on that. There's other things here, macro industry trends and something new. These are the 2 things. Number 4 and number 5 on this list is what really drove me, and those of you on the trading desk who joined me, into buying calls in front of the number. In a nutshell, and I'm sharing this with you now on Trade Desk, not just to say, well, look how much money we made. Well, okay, that's great. Stock's coming down now. This is at the very top of our power play list. We will get another entry point into the stock. So there will be, in our opinion, an opportunity to buy Trade Desk, and that's why I bring it up today. I want you to listen to that conference call. If you have the time and the inclination, go listen to the last 3. Everything management's been telling us has been true. That has value. And this is the story in a nutshell. The way ads have been served up to audiences hasn't changed since the 1960s. It's changing now. It's changing now because of services like HBO Max and Netflix and Disney Plus and all of these subscription services that are shifting to a subscription / ad-based service. It's shifting because we've gone away from typical TV into the CTV market, which is now, I just saw the story just on Twitter last night, that that there's more viewers that just pass traditional viewing. right? So the trend is just gaining steam, and we know it's all going that way. So the way ads are served is changing, and the company at the center of that is Trade Desk. So while their competitors keep having problems, they keep collecting customers. And that's what makes a big stock. So what you want to do is listen to the conference call, which is number 7 on our list, so you can hear a management team, and then you write down your notes, which is what we do. If you're the ARMR report, you can subscribe to it. You can go to our research section, and you can pull up Trade Desk and see all of our comments. We cover the conference calls, and we comment for you in bullet form what we're hearing. You can see the last 3 conference calls. Then when you see what the company does, you realize these guys are telling the truth. They're killing it. Everything they say is coming true. That creates a comfort level for institutional investors. I'm not the only one that figures this out. This is how institutions run money. Drives the stock higher, and it creates what we'll start to see now over time are higher lows, higher highs, and institutional sponsorship will grow in the stock. So anyway, just wanted to follow that up because we spoke about it a couple of weeks ago, kind of how, the basic picture of how to build a watch list from a fundamental point of view. And now here's an example. Trade Desk is the example of how building your watch list, getting the algorithmic entry point, and taking your shot in front of earnings can really pay off. Now the stock comes down, it's going to fill the gap probably, make a nice pattern, and then we'll get out there and start buying it again. And if you're an ARMR insider, you'll know when we're doing that. Feel free to subscribe right here to the ARMR report. Follow us on YouTube. Subscribe right there. And of course, hit the like button if you found this information valuable.